Hello, good morning, everyone, and welcome to this bright and early session on trading the markets. And I hope you're well, hoping you're in good health and keeping safe. So as usual, we're just going to go through the market, see what opportunities there are today. And then following that, if you have any questions, we'll go through the questions. And as usual, this Tuesday morning has been dedicated this Tuesday morning to go through any issues, questions, problems you have. So we'll fire away. Let's kick off. So as usual, we'll start off by looking at the economic calendar, see what that has in store for us. Yesterday, we know we had the public holiday in USA, the President's Day. So yesterday was a public holiday in the US. So as we know, there's a high probability of all markets trending sideways during public holidays, either in UK or in USA. So we didn't trade yesterday. Well, I keep saying we. I didn't trade yesterday because some people might not want to stick to the trading plan. So let me say, I didn't trade yesterday due to the public holiday in the US. But let's have a look at today. Today is Tuesday, the 16th of February. And again, I'm using the Rwandan time zone, which is GMT +2. So I'll be quoting the times in GMT +2. So let's have a look at what's in store today. The main market we're looking at is the Euro-US dollar. So I'll be looking out for reports of high importance that could affect the euro or the US dollar. And of course, note reports of medium importance that could affect either of those currencies. So let's have a look. 16th of Feb. So the first report of high importance we have today is at 12 noon from the euro area, which is the GDP growth rate. And that's, of course, that's a report of huge importance. Again, like I said, the four reports that are always of huge importance are GDP, which is coming out today for the euro area, which will obviously affect the euro. So GDP, consumer price index, which is inflation rate, unemployment rate, and interest rates. Those four reports are always of huge importance. And of course, interest rates is the most important of them all when it comes to trading currencies. So we have that at 12 noon. So we're definitely going to do well. I'm definitely going to keep out of the markets prior to that report at 12 noon GMT +2. Also at the same time, we have the Euro area economic sentiment index and also the Germany economic sentiment index. So they're all coming out at the same time, but obviously the big one is the GDP growth rate for the euro area. So let's have a look at the rest of the day. So that's it. So that's the last report of high importance today is at 12 noon. So I'm going to avoid trading prior to 12 noon, and then I'll reassess the market just before the report at 12 noon. But again, as usual, look at the rest of the week because there's some big reports coming out later on in the week, which could affect our trading today. So tomorrow is the 17th. Let's have a look from tomorrow, Wednesday the 17th. We have the UK inflation rate, the Canadian inflation rate. But this is the big one tomorrow. The big one tomorrow is the US FOMC minutes. FOMC stands for Federal Open Market Committee. That's the committee that met to decide the US interest rates decision. And of course, the US interest rate decision has a huge impact on the global markets and all currency pairs. So this was the minutes of that meeting that they decided the US interest rates. So the detail of the minutes of that meeting will give people an indication as to what they were thinking before they made the interest rate decision, and that could give them an indication of what they might do next. So that's a report of huge importance coming out tomorrow night, 9 p.m. Rwandan time, 7 p.m. UK time. So this is a report of huge importance that will affect the markets. And again, because it's of extremely high importance, and obviously the market, everybody knows is coming out tomorrow, that could actually make the markets trend sideways today. So the markets could just trend sideways today, tomorrow, all day today, all day tomorrow, leading up to that report tomorrow evening. So again, this is why it's important to check the rest of the week, because in view of this report coming out tomorrow evening, I will only be having one attempt at the market today. As usual, if you want to find out more information about the report, you can just click on the report and read about it. And again, like I said, if you're new to trading, it's important to read about these reports, know what they mean, know their significance, so that you can begin to judge for yourself as to how important or not the report is. So this is a huge report, this FOMC minutes. So that's coming out tomorrow evening. Let's see, Thursday. So this is Thursday the 18th. So that's also very important, but that won't affect us today. And then Friday the 19th, that was Japan inflation rate. Okay, so the big report for this week is the one coming out tomorrow. The FOMC minutes, the Federal Open Market Committee minutes. That's the big report coming out for this week. So we're going to be careful trading today because of the report coming out tomorrow. So again, that's another reason why, well, just highlighting the reason why it's always good to check the economic calendar for the whole week when you start trading on Monday, which is what I post on the platform every Monday morning, the economic calendar for the week, because it could impact your trading. So go back to today. So that's the Euro area GDP. That we'll wait till that before we trade. But like I said, we're only going to have one attempt at the market in view of the report coming out tomorrow. And as usual, you also keep an eye on Market Watch, know what's going on in the global markets, financial news wise, that could impact your trading. Of course, you're looking for uncertainty in the market. And again, that's the advantage of trading currencies, because it tends to be major news that affects currencies, not petty news. It's petty news that affects the stock market. So a lot of things that affect the stock market itself, but not the currency market. With the currency market, it tends to be things like wars, trade wars, and all that. So what you're trying to see is if there's, crazy things going on between China and America, maybe they start going through trade wars. Of course, people are still waiting to see what Biden's administration policy will be with regards to China, Iran, the trade deals with the UK. All that is still coming up, but it hasn't started yet. So basically, there's nothing really untoward going on in the markets causing uncertainty in relation to trading the currencies, specifically currencies. Of course, we know what's going on with the COVID pandemic, the COVID crisis, the vaccine rollout, but that's not uncertainty. I think we're all getting used to COVID. We're learning to live with COVID. So you can't really call the COVID pandemic uncertainty anymore. We know what's going on. So from a news point of view, it's really nothing untoward from a trading point of view. Okay, so with that, let's go to the charts. We'll start with the swing trading. So we'll go to D1, daily time frame. Looking at the daily time frame, we're still in our live sell trade from the 15th of January. So we've been in this swing trade for a month now, which is not going anywhere quickly. But anyway, so we're still in this live swing trade, sell trade, looking at the moving average for today. So we'll just look at the moving average for today. The moving average for today is 1.21567. So I'll just round that up to 1.2157. So 2 pips above that to be 1.2159. So I'll just adjust my stop loss to 2159. 2 pips above the moving average. So that's it for my swing trading, and I'll reassess again tomorrow. At the moment, you know, it still seems to be trending down, but we'll see. Again, don't forget the higher highs, higher lows. You can see where the market formed the low point there, then the high point, then a low point. When it broke, the moving average took a sell order, formed the low point. So it formed a lower low. Then it went up from the high point there. And that high was lower than the previous high there. And then it formed a low point there, which at that time, it looked like the market had stopped downtrending because that low there was not lower than the previous low. And it went up from the high point, which was lower than the previous high. Then, of course, it fell down, formed a new low. But again, it's creeping up. It's not yet, it's just about the same level as the previous high. So it might be it might start trending sideways. We don't know, but we'll wait and see. But obviously, that's again the good thing about having a clear trading plan, whether you're day trading or swing trading. At least, you know, from our live trade, you know, we've already said, well, I keep saying I've already said I'll move my stop loss with the moving average. So that's what I'll keep doing till it takes me out. So that's what I've done already. Check the moving average for today and adjust my stop loss to 2 pips just above the moving average, and that's it. Till tomorrow, and I'll reassess again tomorrow morning. So let's go to the day trading point of view. Go to the 5-minute time frame. And again, as usual, we check the trend first. So again, this is the good thing about, again, observing the market yourself and following the same market. Yesterday was the 15th, and again, you can see yesterday, the 15th, you can see from the time frame, 15th of February. So you can see the market was just going nowhere yesterday, which is what we expected with the US public holiday yesterday. So the market was not going anywhere yesterday, it was just trending sideways. Okay, but you can see, let's just start from this bit here. So you can see from this bit here where it's raced up here from the high point there, then a low point, then a high point, then a low point, then a high point. So at least here it was forming higher highs, higher lows, formed another new high there. So at that point it was still uptrending, it formed another new high, but you can see that low was obviously lower than that. So again, it's low, it's this uptrend, this brief uptrend they had stopped. So it's from the low there, a high, a low. So again, it's from the lower low. And then it's from here, it's from the high, a lower high. So we're not sure yet if it's going to form another new low. So far, you know, it looks like it's beginning to downtrend. It's from the low, a high, a low, a high. This low is lower than that low, so it's from the lower low. This high is lower than that high, it's from the lower high. Of course, the market is still active, so we're not sure what's going to happen yet, whether it's going to form another low and continue to downtrend. But we'll wait and see. But obviously, because of the report coming out today at 12 noon, Rwandan time. These are all Rwandan times, GMT+2. So we already know there's a report of high importance coming out at 12 noon. I'm going to avoid trading prior to that. I'm not going to place any orders now. I'll reassess the market again about 10 minutes before that report. I'll reassess the market and then decide where to place my orders just before the report is announced at 12 noon Rwandan time. But that's what the trend is for now. But we'll leave them. I'm going to leave the market alone and wait and see. Okay, any questions? Okay, Bola, you've got your hand up, and you've also got a question in the question box. We'll do both at the same time.
Yes. Good morning, everybody.
Yes. Hi, Bola. You said if yesterday had been a public holiday, would one attempt equally have applied? Yes.
Yeah. Okay.
So yes.
Yeah, okay. Yeah.
Oh
so
yeah,
basically,
you said yes. So you said yes yourself.
yeah, I did think so, but I just thought, let me just confirm, because that's been the principle that I've been applying to that, where you have, so where you talked about, especially interest rates reports, that prior to that report coming out, you trade with caution. So one attempt at the market a day.
Yeah, exactly.
Yeah. I just want to sort of talk about something I experienced on my platform last week. And I'm wondering if this is what you were talking about all along when you said something could just happen in the market and, your platform could go crazy. It happened to me last week. I can't remember what day it was. We put in a buy order. Unfortunately, I had put in my stop loss, and I had my platform in front of me while I was working. And then I just happened to look at it, and it went haywire. It just went up and down all over the place. And the screen for the buy order came up, and then it stopped, and it was just all over the place, and all of a sudden it just stopped, and then my order had gone, and I thought, hold on a minute, did my screen crash? Maybe did my screen crash, or is this what Remy has been talking about, that when suddenly there's this huge activity and it's all over the place, and you can't explain it? So I mean, I don't know, did my screen crash, or is that what you have been talking about all along?
Yes, that's what I've been saying, that because you find that, so I'll just get you to unmute for a second. I think we've got an echo from your...
Oh, okay.
But yes, you're correct, because that's what I was saying, that anything can happen in the markets at any time for no reason. And the market can just become volatile for no reason. It could just be a burst of activity for no reason. And again, that is actually why it's important to always have your stop losses in place. Because I know some traders who don't trade with stop losses. They want to see what's happening in the market. They decide, and I think that's very risky for the reason you just mentioned now, Bola, because you find that you can just say, and those friends of mine who don't trade with stop losses, man, they've had some huge losses in one trade, because you could just place a trade thinking that the market is quiet, thinking not much is happening. And then if you're one of those people that don't place a stop loss, the minute you just say, okay, let me go and grab a bite or go to the bathroom, you might just find that the 5 minutes you go away from your screen to the bathroom, something crazy happens and the market just goes crazy. And then, if you don't have either your stop loss in place or your profit limit in place and all these things in place, you could just find yourself in trouble. All those scenarios can happen. So for example, you could have a trade, you did not put your profit limit in place, and then the market goes crazy in your favor. Maybe it just falls like, 70 pips. And then the minute it falls 70 pips, it just reverses back 100 pips. And you missed out capturing that 60 pips because you didn't have your profit limit in place. And then same things with the stop loss too. If you didn't have your stop loss in place, before you know it, you're losing, 60 pips. You just find that you're at a loss of 60 pips or more. So this is why it's always important to have your stop loss and your profit limit in place, because crazy things can just happen. And of course, you're not going to be glued to your screen 24 hours a day. In fact, I'm never that. That's actually why during the course, I taught you guys how to trade in a way whereby you don't have to be glued to your screen 24/7. which is what makes some people go crazy as traders. And that's why sometimes trading have a bad name, because you have some people who are glued to their screen, which is just you're not going to last as a trader if you're going to be stuck watching your screen all day, 7 days a week, 5 days a week, every year. You can't sustain that. You're not just going to have a life. So that's why, you know, the strategies I've taught you and the way I taught you how to trade, at least you know that even if you switch off your computer, if you have to go and do some other things, or you have other things to do, you know, you at least you know from a money management point of view, you already know what you're risking. You know you have your stops in place. You know if the market goes against you, you know what you're going to lose. If the market goes in your favor, you know what you're going to make. You know where you want to enter the market, so you don't have to be watching the market all the time. But yes, I'm glad you experienced that, Bola, because this is the whole reason why it's important to have your stop losses, your profit limit, all this in place, because all you need to do is leave your screen for a few seconds and you could just see crazy things happen. So yes, that's the beauty of trading, where things can happen. Is that good, Bola?
Yes, it is. Thank you.
Pleasure.
Thank you.
You're becoming a good trader now, Bola. So all this, that's the beauty about, that's why I'm happy with, like I said in the last week with your observations, Bola, is that, you know, most of these things, when you teach people about trading and tell people certain things, until you experience it for yourself and you see things for yourself, that's how you begin to become better and good as a trader, because I always say trading is a practical thing. And the more you trade, the more you see things happen in the market, the more you observe things in the market, then things begin to make better and better sense. Because yes, so like you said before, Bola, there's certain things I will say or teach, but until you experience it, it just won't make sense. But when you experience it, nothing better than experience to make it stick. Any other questions? Pleasure, Bola. Any other questions, comments? Before we go for breakfast? Like I said, this is your time to ask all the questions you want. Obviously, we're still going to go, we'll still keep up on the platform. I'll post what I'm going to do just before the report at 12. Okay, so that's good. So if there are no questions, I'll let you guys go for your breakfast. So enjoy your breakfast and we'll catch up on the platform.